here's a debutant, and it's Aniket Dharamshi. He's a part of the Dharamshi family, one of the foremost families in India in terms of stock market investing. ValueQuest is a firm where they are managing public money, and Aniket now is also part of ValueQuest, where he is managing a private equity fund. It's his first time ever, and let's really hear out that how private equity investing is different from public market investing. So as promised, Aniket Dharamshi for the very first time on Indian television. So it gives me great pleasure now to welcome actually a friend on ET Now for the very first time, introducing Aniket Dharamshi on ET Now. Welcome to the world of media.
Thank you so
Welcome
much,
to the
Nikunj.
reality where television anchors now will be asking you tough questions.
Thank you,
Are
Nikunj.
you ready
Really
for that?
appreciate it.
Okay, my first basic question is that the fund you manage is a fund which is investing in private equity. I'm simplifying it for our viewers. These are non-listed companies. We know that public market investing is different and private market investing is different, but I want to hear from you how it is different.
See, the process of private equity is very different from the public markets, right? You have to go through bankers to source deals. You need to have the capability to find good deals, after which you negotiate with the promoters on the rights that are available to you. You have a huge risk at stake, which is the liquidity risk. A private market investor does not have exit options available to them the same way that public market investors do. And then they have the capability to exercise, if they go wrong, very easily to get out of an investment, which is not the case in private equity. Private equity is a lot more nuanced, and you're the first time value giver to a private equity investment if this is the first round of capital raise that they're going through. So in that sense, you have to price the asset correctly. You have to understand the vision of the promoter. You have to have the guts to back it. And then going from there, you have to find a successful IPO or an exit in the near future for you to be able to create wealth for your investors. So it's a different ball game. The depth of work has to be significantly higher than the public equities, and due diligence is a very strenuous process. Each deal takes anywhere between 3 to 6 months to close. It's a lot of time, a lot of effort, and it's not as easy.
When you are investing in private equity companies, what are the factors you look at? I mean, in public market, for example, some would say we look at return on capital. Some would say we need to look at the moat in the company. We look at intrinsic value. When you're investing in a small company, which is a private equity business, what are the characters you look at?
So we have a saying at the TriStar Fund, Dhanda, Banda and valuation. So we look at the business model first, followed by the vision and the execution capability of the promoter, and how we would like to price the asset so that our investors are then able to get an exit which is favorable. So without good business economics and unit economics in place, it is very difficult for a business to succeed in private equity. Without the right promoter who has a capable team to be able to execute their vision, it is going to be a strenuous journey, because a lot of promoters try to do a lot of things and they lose focus. And when they lose focus, it's the investors who lose money.
I have historically seen that private equity funds, they normally have this whole COC, which is called core of competence. One core competence for ValueQuest of late has been energy transition. For the TriStar Fund which you manage and which you're proposing to raise capital in, what is that COC? What is that theme?
So for us, defense and aerospace are the themes that we focus on. My co-fund manager, Dr. Arvind, and I have been looking at this sector for over a decade, both of these sectors. And aerospace is something that we are extremely excited about. It's something we feel which has a long runway. It has a high entry barrier in terms of the certifications and the qualifications required, with the OEMs and the licensees. It is a sector that's just opening up for India with the outsourcing of supply chains happening across the US and Europe, simply because post-COVID we've seen a phenomena where a lot of the skilled labor that was a part of this industry have not returned to work. And so there is a huge backlog of the number of aircraft and the number of engines that need to be produced, which is why we feel that India has a big right to win in this sector. Also, there's a big China plus one theme playing out with the fact that IP in China is very loosely held. And in the past, they have infringed on a lot of aerospace IP when engine manufacturing was outsourced to China, which is why the world is not too keen on giving them the technology to manufacture aerospace components because they will ultimately be used for military applications within the Chinese armed forces. And we have Rungsins, which we just closed very recently, which 50% of its revenues come from aerospace and 50% come from defense. But the defense portion is largely catering to the military aircrafts that exist in India today.
So I can say that you like aerospace, within that you like precision manufacturing.
Yes.
To put it very simply.
Yes.
These are not the large scale factories, these are not your mega factories which do work for aerospace. That's still in US, that is still in China.
Correct.
But you're looking at folks who actually would be the second or the third derivative beneficiaries.
Correct.
What about tariffs, Aniket? If tariffs come in, this is one sector where we know that there is a Boeing or there is an Airbus. And one is French, the second is American. Can tariff really hit these businesses?
Tariff can hit these businesses, but the way the component ecosystem works in India is that the tariffs will be borne by the OEMs, which is not in the favor of America today. So because components need to be outsourced, because they don't have the capability to manufacture in America, because they don't have the required labor force, they will need to find some place to manufacture these components, which would be India. And therefore, I feel that I can't comment on Mr. Trump's policy, but I feel that he will not hinder this entire supply chain for Boeing. And Airbus has been outsourcing continuously, so I don't think it should be such a large challenge, considering that the tariffs will have to be borne by the OEMs who have a large backlog today.
How much of your fund currently is in aerospace as percentage? How much is there in other sectors?
So our fund has just begun and we've just made our first investment. So far, roughly about 10% of our fund is in aerospace and defense.
And could it be like a larger commitment as the fund grows?
Yeah, as deal flow shows up, we will construct our portfolio based on what is available, but I would think that aerospace and defense would make up a large portion of our fund.
What about minus 90%? I mean, where do you think, where are you picking your spots?
So I have a sector-specific fund. We only look at 5 sectors. We look at aerospace, defense, precision engineering, niche manufacturing, and energy transition. And we feel that in the energy transition space, there's already been a lot of investments that have hit the public markets. The cell manufacturers, the module manufacturers are all listed. So we feel that the smaller component players, like the solar pumps and so on, will be the opportunities to focus on in private equity. We feel that the aerospace ecosystem is just opening up for India, so we feel that there will be a lot of companies in the near future that will come up in this space. Defense has accelerated after the defense acquisition policy of 2020, where indigenization has been the focus. So we feel that a lot of smaller, high quality businesses and promoters will come up in this space in the near future, and we are here to help them in their journey.
I'll just wrap it up with one final question. I'm just, such an engaging conversation. I'm glad that, you accommodated this request. Normally, PE investors, they like to buy consumer tech, fintech, AI, things which essentially are the fashionable words right now. You're using words like manufacturing, precision manufacturing, aerospace. These are good themes, but not typically themes where private equity investors have invested in the past.
See, one of my mentors is Mr. Charlie Munger, and he said, don't, veer out of your circle of competence. And I've always liked manufacturing businesses for the last decade. I don't really understand pharma or BFSI or AI or technology, but I understand these businesses which are the core competence of which is manufacturing. They're, I feel, easier for me to figure out in that sense. And I feel there is a large external addressable opportunity with high entry barriers in these sort of businesses in India today, and somebody needs to fund them. So I feel it's a great opportunity to action.
Well, fantastic. And that was Aniket's debut on ET Now, television debut actually. So thank you very much. And I'm tempted to book my next appointment already with you. Karte hain.
Thank you so much, Nikunj.
Thank you very much.
If you like this video, then like, share and subscribe to ET Now.